So, Richard, there has been a lot going on in the Brexit negotiations since the referendum, and there's still a lot to come. But this week it will be crucial. So, what are the markets going to watch this week?
Well, I think coming into this week, what we've seen is that sterling volatility has risen significantly. If you look at how FX options have been moving significantly higher, they're at the levels on the 1 month sterling dollar, 3 month sterling dollar at levels that they haven't been at since that EU referendum back in 2016. So we've seen the daily ranges increasing as well throughout the last few days as this uncertainty surrounding Theresa May and whether she can get this deal through the Parliament continues to drive through sterling dollar and also euro dollar. So I think that's euro sterling. So I think that continues to be a key factor that traders will be looking out for.
And also there's a leadership challenge for Prime Minister May. I guess we are talking about no confidence letters sent. So is this also important for the markets to watch?
Absolutely, yes. I think they're not quite at the threshold yet. They need 48 letters to be submitted. I think from my understanding they're in the low 40s at the moment, so they're not too far off it, and it's possible that could be seen in the next day or so. But that certainly is a big volatility factor. If that is announced, that there is a leadership vote that needs to happen in the Conservative Party, that will be a big selling factor through sterling, I think, in the coming days.
And actually, there has been a lot since 2 years, and even more than 2 years, ups and downs, twists and turns. But the parliamentary vote is still expected to be the hardest part of the negotiation process. So, what are the expectations from this parliamentary vote on the Brexit deal?
Well, what we saw in the 2017 general election was that Theresa May lost her majority in the Parliament, and she has currently only got a government because she's been backed up by the Democratic Unionist Party, that they give her 10 votes in the crucial votes that go through Parliament. So this Democratic Unionist Party has already said that they do not back her in this Brexit vote, so theoretically already she's not going to win that vote. Then if you take into consideration the fact that you've got maybe 50 or 60 hard Brexit Conservative Party MPs that are willing to not vote for the deal either, she is really struggling to get that through Parliament. She's going to have to rely on the Labour Party to effectively go against their leader as well to vote for her, and again it's seemingly unlikely. So the arithmetic does not really help her in this scenario, and I think that's going to be a real significant blow that the markets will face, and also Theresa May.
Yes, and there are many possible scenarios on what's next, and we are speaking about no deal, Brexit, or a second referendum, even general elections. What are the markets preparing for right now?
Well, I think that it is interesting that the reaction that we saw from the moment that Theresa May announced the deal, sterling went up, and then when she started to see the resignations coming through, sterling fell quite sharply on Thursday. And I think that just tells you that the market obviously wants to see a deal coming through Parliament. But as I said again, the fact that sterling fell so sharply and has rebounded a slight amount, but not too much, I think that still tells you that there is a degree of downside that we're going to still see play out if there is no deal that comes through. Because if the UK accidentally goes into a hard Brexit scenario where there is no deal, I think we could see sterling dollar down in the low 120s. So there is a significant amount of downside that we could still see from this outcome. In the event of a general election, again, that increases the possibility of Jeremy Corbyn, who is the leader of the Labour Party, the Socialist Labour Party, getting into power. Again, the markets would not like that necessarily, because that means that the fiscal side of the equation does not really help where the fiscal spending measures would probably be increased, and the bond markets would have to react to that. So I think that's why you'd see sterling down in a Labour Party government scenario as well. So that there is a lot actually on the balance of probability that is going to be driving sterling lower, I think, in the coming weeks.
Yes, and speaking about fiscal policy, Bank of England Governor Mark Carney is going to be in the Parliament tomorrow for the inflation report. And on the last monetary policy meeting, we saw him speaking about mentioning that BOE will raise the rates even on a no-deal Brexit scenario. So, but since then, after the turmoil last week, we saw markets pricing and seeing a lower possibility of rate raise in 2019. So what can we expect from him tomorrow?
Well, the Bank of England has done its forecasts on the likelihood that the UK would get an orderly Brexit, and I think if there is no orderly Brexit, which again the market events are seemingly moving towards a disorderly Brexit or perhaps even other scenarios, certainly not having an orderly Brexit anyway, the Bank of England are going to have to try and recalculate how they do their growth numbers, potential inflation on how the fact that sterling, say for example, if it plummeted to $1.20, they would have to recalculate their inflation projections as well. So there would be significant changes to their economic projections in that scenario. So how that would play out in the fact that if they're trying to move towards a rate hike into 2019, I think that would be a difficult one to get past, because previously the markets have been talking about May or perhaps August as the next time we get a rate hike from the Bank of England. I think that those, as you say, those expectations would be pushed out significantly in that scenario.
And you already mentioned the worst case scenario for sterling going down to 120s against the dollar. But to wrap it up, what do you expect for the best and worst case scenarios in FX and also equity markets for UK?
Well, I think the best case scenario you would see is obviously Theresa May getting this deal through Parliament, and that would help sterling dollar significantly. 135, maybe up to 140, I think would likely to be the where we would see that, because you'd still get the Brexit, which is likely to have subdued impact, subdued negative impacts marginally on the UK economy, which is why we'd expect maybe 135 to 140. In a hard deal Brexit, you're looking at 120, I think, on cable, certainly. I think in terms of equity markets, it's a very difficult one to call, because there's going to be your winners, there's going to be some losers. And you saw the other day on the FTSE 100, when the announcement came that you're going to get the resignations coming through, possibility of pricing in a Corbyn government and a no-deal Brexit. Those scenarios, you saw the banks under pressure, you saw the utilities under pressure, and the house builders as well. So these companies, very much UK centric, but also focused on how the economy performs. And I think that was a significant concern that you'd see coming down the line, because FTSE is balanced between the fact that it has around about 3/4 of its earnings generated overseas. So a lower sterling actually helps those companies, but the UK-centred companies in the FTSE 100 would really not benefit.